This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro. So today's video is going to be on using multiple time frames to identify the absolute best signal when you're looking for a reversal play. All right, this pattern happens, and we only have to use price to identify it. Although I recommend using a zigzag indicator. All right, let's go ahead and get into this. I think you'll find it interesting. And some of these techniques you can find in my book. I'm offering at a discount right now. Go to rabilstockresearch.com /book for more information. All right, let's start with just this graphic so that you understand what we're trying to find. And I refer to this, and I've talked about this in the past. It's a 2 of 2. All right. And once you understand this, you're going to know that during this period here, you're on the lookout. You're stalking. All right. We want to be on the lookout and thinking ahead. I've said this numerous times on this channel. We want to think like a chess player. You want to be thinking 2 to 3 moves in advance. In order to do that, you have to understand these concepts. So we're going to start with this. And essentially what we're looking for is a trend to the downside that has broken. This trend line shows that we've broken this pattern of lower highs and lower lows, and then we get a retracement back and test. So again, a lot of times, and right out of my book, I go into a lot of detail on the 1, 2, 3 reversal. All right. And what I'm trying to identify is the 2. And if we have the 2, which is this right here on this time frame, we don't know that it's a 2 yet because it hasn't turned up, but it's in the process of potentially forming a 2 by testing this low. When that happens, we want to go down to a smaller time frame and look for a full-fledged reversal pattern. And when we have that 2 of 2 signal. And what that tells me is that the trend on this time frame, this bigger time frame, is potentially reversing. All right. And what we're going to do is anticipate that reversal. And because really we don't get a reversal until this comes all the way back up and takes out this high, this black line coming all the way back up to this high. In order to kind of get ahead of the crowd, because this is where it gets crowded. This is where a lot of people are looking to play this. And the risk reward isn't as good. If you buy here, you kind of need to put your stop down here if you're playing off this bigger time frame. It's a pretty wide stop. So the way we can identify and maybe anticipate a little bit is to use the smaller time frame, look for the reversal on this time frame, and then you could play it depending on how things play out. You could play it as it comes back up here and get in, and you could even use the risk on this time frame until we get up to a new high. You could keep using the smaller time frame, but at that point you know that the bigger time frame has turned, and we could play for, look for signals look for signals to take some partial profits and then trail a stop using a wider stop because we know that the bigger trend has reversed. All right. So now what I want to do is I want to show you an exact example that just recently happened in the marketplace. And that is XLU, the utilities sector spider. All right. Now, first of all, one of the things I wanted to point out, and I've been pointing out to my subscribers, is how this undercut this low at 60. So this was a key level. It came down and broke that late last year. All right. And then we got a pretty strong rally. And the strong rally did 2 things. First of all, it came back up through this key low level. This was a very important level, this 60 level. Came back up through that after just marginally kind of breaking it for a week or 2 and then getting right back above. So I refer to that as a undercut and rally. Okay. In the process of that rally, we broke the downtrend line that was in place. I actually didn't even draw that well enough. It broke it by a little bit more of a margin than I'm showing. But then look at what happened. So this was the 1, right? And then this is the 2 as we come back and pull back to the 60 level. Now, this is so important. We not only pull back to the 60 to test this low, but we're also testing this key undercut level at 60. You see what I mean? So this is the undercut and rally pattern where we get a break above and then we come back and revisit that area. And if we successfully hold that area, then we have the potential for a pretty nice reversal pattern. So it's combining a couple different things from my courses as well. Now, when we get to this point where we're in the area of a 2, I don't want to wait for confirmation and wait for this to come all the way up here. I like the fact that it's undercut these lows, number one. I like the fact that it's broken this downtrend line, and now we're testing this low. And we're doing it in a way that doesn't have a lot of strength to the downside. We had some strength here, but on this retest, there was no real sign of sellers at all. We had a low ADX condition in place. So we've got that there. Now, if we go and look what happened on the daily chart at that time, and let me just put up so this is where right here on the daily chart up top, we can see that is in alignment with where the trend line was broken on the weekly. All right. And then we go through the same pattern that I have in the drawing. We go for lower highs and lower lows. We draw our downtrend line. Now, by using the zigzag in this situation, you had to wait a little while because we didn't get a zig down until it made a pretty substantial move off the low. However, by waiting for that, we're getting a lot of confirmation that there's a pretty high probability that a reversal is about to take place. Now, the other thing I would tell you is because the MACD was in such a strong position above the zero line, turning at the zero line, I don't think you had to wait for this to come up through this high. You could have looked to play the higher low. Or even more important, and what I kind of suggest to my subscribers is go look at the stocks in this sector and see if there are any that look really attractive. All right. There were a few that were standouts. They had already broken out. They were already right up above their breakout levels, and they've made really substantial moves. So you can go back through some of those to take a look. But the key I'm trying to point out is we get a reversal on this time frame at 60. We're looking for a reversal on this time frame. In this case, it actually took a little while, but we could have just as easily had this zig right here and had the reversal take place in the low to mid 60s, really right off of this bottom here, and really had I think an excellent entry. But the low risk entry is where you get a 2 and a 2 combined, right? We get this turning up and this turning up at the same time. We can play these and have a lot of confidence that there's going to be some follow through because the bigger trend is likely reversing to the upside. Now, we always want to know what's going on with MACD and ADX to kind of confirm that. And we do want to look at the bigger time frame or even the smaller time frame if we wanted to refine the entry a little bit more. But again, in this case, the dynamics of this reversal were so strong in the way that it played out. The move off the low was incredibly strong in both of these time frames, right? So you kind of had to wait for a little bit more confirmation for that 2 to develop and pull back. If you use the standard pivots, you could have definitely gotten in a little bit earlier. It would have given you a signal a little bit lower. Again, I have a way of defining the pivots that I talk about in my course. So what I think is important to recognize here is the 2 of 2. Get these 2 of 2s. Look for these bigger picture pattern. When you see it on the bigger time frame, identify this and then start hawking and watching the small time frame to look for the dynamics of a reversal taking place on the smaller time frame. Now, I just had a conversation with my I did a webinar for my subscribers. And by the way, if you're enjoying the content, hit that like button and also subscribe. But I just did a webinar for my subscribers, and I talked about this reversal pattern and how you can get an edge on the 2. You don't necessarily have to wait for the 2 if you know what you're looking for, but you have to understand the swings. I spent a lot of time trading swings alone using the S&P E-mini years and years ago, just trading tick charts. And I learned so much about the swings. Get a real good feel for the swings. I have a whole section on that in the course where I go into the 1, 2, 3 reversal. But I like to really focus in on these swings to give me an edge even before I start looking at the indicators. Once you understand this, I think this can help you tremendously when you add the indicators in. All right, give this a shot. Spend some time looking at these without the indicators for a while. In multiple, you could just have 2 time frames side by side and see if you can identify some of these reversals. They happen all the time on the smaller time frames. You could look at a 5-minute and a 1-minute. You'd be surprised at how often they happen on a day-to-day basis. All right. Let me know if you have any questions. We'll see you next time.